Hello. Okay, I think everything's working. I can see chat. I restarted my computer so we won't have like all the things today. So let's see what it surprises me with. Hi, Mary. Hi, Martha. Hi, Fred. Hi, Alice. Hi, Edwin. How are all y'all doing? Can I get some thumbs up or something in the chat if y'all can hear me just to ease my mind? Oh, I was traveling last week and I don't know. I don't know about y'all. I'm not a traveler. I am a home stayer, homebody. But okay, good. I got thumbs up. We're good. I'm gonna take that as a win. I'll try to keep my microphone close to me. So I have tea. If I'm a little groggy today, is actually that's not traveling related. That is daughter related. But you know, you're a mom first, everything else second. So we're gonna have a very caffeinated live stream. I think that's on par for that's on brand for what we're doing here today. So welcome to live stream. If this is your first time joining us, welcome. I see lots of familiar faces, which is really nice. I missed doing it last week just because I was like, oh, but the class. And also, if you're new, this is not an official class. This is, very, very lovely people being here, learning on their own for free. I really love that y'all are here, first of all. Wait until the teen years. Sometimes I feel like we're there already. Okay, so today we are doing a video on check stubs and all the things that can be included in your revenue statement and whether or not it's a valid deduction. I get that question quite often. I get it. Are they ripping me off? I have no idea what all these things are on my statement. As always, this is just our topic of the day. This is a live Q&A. So if you have any other questions that you would like to have covered, feel free to put them in the chat or email them to us. Please try to keep your personal information personal. This is a public YouTube live streamed event. So anything you put in the chat, I can go back later and redact it and get rid of, but anyone who's watching it live will see it. So just as a note of housekeeping, you can email me stuff. Just let me know that you emailed. The email to send it to is tracy@pecantreeog.com. That is my email. Also, if you just like to say hi, I'd love hearing from y'all. If you aren't sure if I will see it because I'm currently talking into a camera, you can also email kelly@pecantreeog.com. She is our project manager and really good at making sure I see these things. And if I don't see it today, I will hit it next week. So we do this every week. It is every week at 12 noon Central Time, Tuesdays. Okay, so Fred, when you have this situation, we'll start with this one. When there are multiple companies paying on the same wells, are they splitting the costs of production, or why is that? And when you have the situation of multiple companies, is your royalty interest split? Your royalty interest is split, and it makes it even more difficult to verify. Yes, so when it comes to oil and gas revenue statements, it's like the committee, the committee of. I have these little clips in my head from other videos I watch where it's like the head of schools, the head of revenue statements got together with the other people of revenue statements and decided that we're going to make them as difficult as possible to understand. And we're going to put them in terms that the people we're sending them to will never be able to understand and figure out. And that way only our accounting group will be able to decipher what the heck we're saying, but we'll have it on record. Therefore, we're covered. And that's really what it feels like, even to people who have looked at these for years. as a reference, I've been looking at revenue statements at least, I don't know, 10, 15 years. I'm trying to think of when the first revenue statement was I saw. And it was, the only reason it wasn't longer was because when I worked at Chevron, we really didn't have exposure to all the sides of it. I was really spoiled with the data just being nicely sliced and diced and presented to me in nice dashboards that weren't always right, but at least it was sliced and diced for me. Then when I was at Jones Energy, that was where I really had to dive into it, because when you're doing reserves and valuations, you have to know all the costs that are going into something. And those revenue statements have such great information on them that's usually the first thing that we ask for if we're doing an appraisal or evaluation is a copy of your revenue statement. Not only does it have evidence of the well name, your name, who's actually getting paid, when evidence that there is payment happening. There's a lot of things that we verify when we are told information over the phone or through email. And so seeing all that actually come through on a statement, that's the first thing. But also it then goes into which wells you're paid on. What is your decimal interest in that all of those wells? What contracts, what pricing, what type of interest are we even talking about? So we're going to do a quick overview of revenue statements, what we're talking about, what we're not talking about, and then also what you can find on a revenue statement, some different types of revenue statements that you might see, and just generally we'll hit things. I mean, this is not going to be an all-inclusive everything video, but I do tend to jabber for a while. So we'll see how long this ends up going. Okay. With that, let's, I don't have any news. I'm sure I have news. So last week I was at NAPE in Houston. Hello to anyone that I met there. It was amazing to see so many people. I mean, I've heard it described before as all of the industry just descends upon Houston, downtown Houston in 1 week, and it's just a madhouse with blue suits everywhere. I was not in a blue suit, so I mean that never in a blue suit. So I guess I was just being my normal self, but it is what it is. That is a very interesting world. But it was, every year we go, we get more and more amazing people we talk to. And I'm just really loving the community that we're building. So we'll go into, I clear my throat. We'll go into the topic. I have y'all. Y'all are in my little chat right in front of me, so I got to move that first. Okay. My music. Yeah, music's not playing. Okay. So as mentioned, we're going to start with a variety of different examples. I have redacted client information, and not all these are clients. This is just, checks that I've come across. If I go back and find, I am 99% sure everything is redacted, but I will be double checking that I didn't miss anything before posting this as like a video, but I do plan on editing these videos eventually and putting them all out like more concise videos rather than people having to watch an hour of a live stream. But so here is what we're talking about when we're looking at a revenue statement. And let me zoom in a little here. All right. The first thing you might notice is that almost, I would say 70%, if not more, of the revenue statements out there have this general feel to them. And that is because 70% or more of them are provided by a company called EnergyLink, which is owned by Enverus, which you might also know as that is the parent company to things like Drilling Info and was it Courthouse Direct? I mean, maybe not Courthouse Direct, but they have a courthouse feature. Mineral IQ, Mineral Soft is also Enverus. If you're using any of those platforms, EnergyLink is owned by Enverus, and so it's all one single company, and the corporations are using Energy Link as a means to get this information to all of the owners. There's so many owners and so much information that needs to go out that a platform was eventually developed that made it more efficient. And eventually that kind of took over as the main way that people are doing it. However, there is now somewhat of it's not a monopoly, I believe, by official terms, and this is all, not legal, not legal anything. This is just, speculation, that they do kind of have a corner on the market. There are other companies trying to provide this information, but they are definitely aware of their corner on the market, and they charge for things that they probably shouldn't charge for if they didn't have that corner on the market. So you'll see the same setup where you have the company name, revenue statement, and then all of your owner information, and then it goes into the actual values and volumes from the wells. Most states, I'm not going to say all states just because there's a lot of states, do require that you are told how much each well made, both in revenue and the price that is received for your royalties, and that you are provided that in statement form. Now, I've had clients tell me that, they aren't allowed to, or they aren't telling, they don't have a way to tell me which wells I'm getting paid for, or they aren't allowed to, or they don't. As far as I understand, that is just excuse and BS, and there should be a way that they can get you a statement in some form or fashion of what wells you're getting paid on, and the accounting of your property leaving your property. Like there's a reason that this is a thing that is important. And that I know in Texas it's required. They have to be able to show you this stuff. So this is just one way that it's presented, but a very common way. And we'll just click through the examples I have just to show examples of what you might see if you're not seeing something that looks like this. You might see something that looks much less pretty, and this is a more, I'm not gonna say classic. Teacher, what does BS mean? It means Bachelor of Science, Fred, and that is the only thing it means. Okay. So you might see this as your statement. So again, this is all just the same information, but just presented in a different format. And so we'll just cover, how to generally read these and how generally you'll find them, because there are so many different varieties of these. And every time I think I've seen all of the varieties, I'll see a new one. I think this one was actually presented through Energy Link. So even though it looks completely different than the other one, it is in fact also Energy Link, but a different company. And yes, this is the non-blurry. It's not your vision. I really just went and pulled samples of what were provided, and it's sometimes it is not uncommon to not be able to read the numbers. They're so small. We got a similar statement to this mailed to us, and we were just trying to scan it, and even on the highest quality scan, like a very slow scan, we weren't able to get a high enough resolution to run character recognition through this so that we could extract the data. I mean, it's so tiny, and it's not just your eyes. Although I am feeling old today, I'm just letting you know. I did one of those things where, you want to have a cool story as to how you hurt your back, but it's like you picked up a pencil wrong, and that's me today. I was like literally at the physical therapist just getting my shoulder worked on, and as I stood up from the chair, like a little like tweak in my back made it like, and so I'm feeling very old, and this blurry text is not helping at all, but we are going to persevere. It is not oldness. It is small text. Okay, here's another one. You might see this is typical for very small operators, mom and pop operators. You might see a very, we'll just call it unique format for it. A lot of times, if you're being paid directly from the midstream company, like the trucking, or if it looks like um, if it's a company name you might see on the side of one of those tanker trucks, like Plains Marketing or on a pipeline or something, that often gets their own little unique format for these statements. Here's another one where it's just a unique format. Again, most of them will look like that first one, but I tried to grab a variety because y'all are going to be seeing a variety across people who are watching this. So this is another common, but with this one, there's a lot of fees, and so we'll cover this when we get to the deduction portion. And then you'll also see a variety of line items on these things. So that's just clicking through a couple examples of what we're talking about and what they might look like. If you see something like a 1099, sometimes I get copies of deposited checks. Sometimes I get, I'll get a lot of random things that people think are the revenue statement, and they're helpful and they're great. It tells us which company, like your 1099 will tell us which company you're getting paid from and how much you got that year, but it doesn't tell you which wells you got paid for and your amounts and the deductions that are being taken, where even what county or what state that was from. It just says that company paid you money in some form or fashion, and that is their accounting of it for the tax purposes. So we're not talking about something as broad as that. We often run into people who never see these because the check is just getting directly deposited into their trust account or their grandma's account or whoever is receiving that, and they didn't know this existed. They aren't being mailed out as frequently. There are still companies that mail them, but mostly they're being provided digitally. So the first place I would look if you're not receiving one of these is go to energylink.com. And they do have a place where you can search for the company that you're receiving the check from and see if they're one of the companies that also provides this information digitally. And then you can sign up for an EnergyLink account. It's free for owners. They're trying to get as many people to use it as possible because then they kind of have you hooked. And then also you'll see all sorts of stuff come through EnergyLink that is weird, that's coming through a revenue providing platform, but where else would you sell your minerals, right? Please don't sell your minerals through just a single listing on EnergyLink, but you will see them. All right, so then what is included in a check? What am I looking at when I'm looking at it, this first check? So the first thing is the owner. I have it redacted on all of these, but that owner name is important. If it is the trust rather than you individually, have that recorded in your personal documents if they're paying the trust or if they're paying you individually or if they're paying your dad individually and you separately. They might have 10 different entities for that's all going the same place. So it really matters who that owner is. Almost every single company I've talked to and seen has an owner number that's assigned to that owner. And that's why the owner name is important, because the owner number is unique to each listing in their system. And if you're ever talking to anyone that's distributing oil and gas payments or trying to figure out how much you receive, they're going to want your owner number, and that's the easiest translation. It's like if you're talking to the U.S. government, giving them your social security number. It's their ID that shortcuts it to their records in their system. And so if you're ever talking to anyone in division, like a division one analyst, a royalty specialist, a ownership, blah, 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 that they might say on their things, make sure to include your owner number in every bit of correspondence, and that will help them stay on the same page. The other thing, so it will also say the location of the operator. That one's a little more obvious. It's like getting your bank statement. Oh, look, it's from Chase. Yeah, we know. Check number, check amount, check date, and check type. This is often all you need in order to set up your EnergyLink account. Owner number is, I think owner number, check date, and check amount is all you need if you've never set up your EnergyLink account. You just need to verify that you have that statement in hand, and that's usually the things that they need in order to verify that. And if I've seen it before where people had multiple EnergyLink accounts they had to set up, so they'll log in and they'll see a couple companies feeding to one account, and then they're like, well, what about this check? And then they'll set up that account, and it's a totally separate account, and then they end up needing to merge them. You can merge them if you have multiple EnergyLink things happening. There's a way in EnergyLink to combine them all together so you can see all your statements in one place. Hopping on the phone with them is often the easiest way to do that. But I think there used to be at least places you could do that digitally. And I talk about EnergyLink a lot. I'm not affiliated at all with them. If anything, they've annoyed me more than anything. But it's just, there's so many helpful features there that I'm trying to help you know about it. Other options, I think one other place I know that offers this type of information is, I think, Mineral Answers. But I think have a very small market share right now anyway. So those are all very important. There's a lot that is said as to saying that you can't use this data, can't scan it, can't scrape it, download it. That's interesting because I've heard through the grapevine, this is again not legal, this is just, me talking as a random person on the internet, that this is overreaching. But at the same time, if someone's asking you to scrape it, that's also that's your choice. But this is actually probably my biggest headache, is the fact that they really lock down this information, even though it's just your statement of what happened. And that's honestly, it's because they are selling this data digitally, but they are required to send you a copy of it. So they're sending you a paper copy, basically, like a digital version of the paper copy in the most annoying format possible. And so that is, I've not heard it directly from them that is their business strategy, but that is basically what's happening, is that they're providing it to you in a very non-helpful way that is very hard to analyze and very difficult to, take month to month. But you can, especially if you have just a couple wells. But if you have more than a couple wells and you have the need to do this, they want you to purchase their Excel files. You can download an Excel version of the statements. It does cost money. I think it's like $1 per well type range. Don't quote me on that. And it's one of those companies where they have their unique costs with each person. But it adds up really quickly. And so they also have the CDEX format, which is what the other bigger companies will pull in. So if you've seen the word CDEX or an Excel icon, it's really just the format that they're getting stuff to you. Okay, now we're on to the actual statement. And for this, I will zoom in some more. Okay. Boop-a-doo. Every statement that I've seen, at least, somewhere along the top, it will say what property. And they'll include other things in there to help get on board with where that property is or locate it. But for this particular case, the property name is the PM King AR 1-AR. That's the well name. And everything else is identifiers for their own purposes. So if you are being asked for an API number, like on our platform, you can search for a well from the API number. This is not it. This property number is not the API number unless it just happens to be the API number. And I think only in maybe 10% of the cases I see the actual API number on the statement. It's normally, this is their internal code for the well. And then, but you will, and I think this is a requirement in most states, the property name, the state, and the county needs to be reported. Like, what are we actually talking about when we're talking about these volumes? So this portion here should be included on everything. Now, it might be hard to track down that. I've seen things like the Smith 1 or Tract 5, things that don't actually tie to anything on the like public websites. You have to really, really dig to find what it ties to, but at least there is a name. Now, from there, you have to think about these in groups. So it's telling you everything related to that well in the next like segment. And most of them are structured that same way, where you have a well. Let's see. This is, oh, I'm like redacting stuff on the fly. We don't want to redact stuff here. Go get out of that. Okay. This one we have. Yeah, it's just the property name. So this one's actually a little, even for me, just reading it off the fly, off the cuff here is it's a little more difficult, but it is broken up to where each property has its own chunk of data that we're going to look at. Here's this one has its own chunk of data here. This one is formatted vertically. So this one, the chunk of data goes up and down rather than left and right. Again, I'm redacting things accidentally. And yeah, they all have that same general. I'm gonna see behind the scenes how I redact things, where you have the well name here, and then all the things related to that one well directly after it. I know I'm walking really slow through this, so but like I said, they make this as confusing as possible. For this example, all of this one page is related to one well, and let's see, this other well, yeah, here's the property name, and then everything, like there's a lot, there could be several pages of rows all related to the same well, and the line item information is what you're looking for after that. Okay. From there, the most common things you'll see is a royalty payment or interest or something related to the amount that you're receiving. This particular one has the type of like what is happening on this line item. Okay, well, this line item is talking about the royalty interest. And then the next line item is talking about the severance tax related to that royalty interest. And you have to kind of read it like a book. Like it goes over and down, over and across and down, over and across and down. And these headers are lining up with the first row, second row, third row, first row, second row, third row. And you have to take that pattern. Again, I think it's just to make it difficult to scrape the information. Because if this was in table form, like normal table form, it'd be really easy to just drop it into any software to grab what the values were and make your own Excel file. But with how they have it, it's very there's no set pattern, or it's very difficult to scrape. Okay. Something that is a very common thing to know about is there's the production date here, and that is different than your check date. So in this particular case, we have a June check date, but the production dates were the dates that the product actually transferred hands. So that was the date that the trucker came and picked it up, or that was the date that it went down the pipeline to the next company that bought it. That production date should line up more closely to what is reported on the state level. However, there's like 8 different places that people are marking things. So like there's the date that the pumper thinks that it made a certain amount. And then there's the date that it actually leaves the property. And then there's the date that the new owner receives it. And then there's the date that everything is reconciled. And then there's the date that everyone gets the checks. Like there's a lot of dates that can happen, but these are the most common dates. The date that the product leaves the property and the date that the owner receives the check. On our site, just as a reference, when we say well revenue, we're referencing the most recent date that you received a check. And we're using the information that was the most recent date that well had something leave the property. So we are working on adding more to that where you can like track other things. But for right now, that's when we were talking about well revenue. We're talking about the amount that you most likely saw in your latest check based on the latest amount of things that left your property. Okay. All right. Now deductions. Everything after that point are things that I get questions on, like, is this legitimate? Is this real? Should I be worried about this? Is this something that they're ripping me off with? Like, I don't know what these mean. This is where I start getting all of these questions. So we're not going to be able to hit everything, but we'll hit as much as we can. All right. The property values. If you notice that the price changes month to month, that is because that is the realized pricing that product got on that well with that contract once everything was said and done. And that doesn't necessarily line up with anything that you'll be able to find online, like maybe on Yahoo or Bloomberg or Wall Street Journal, oil prices or something. This is that local contractual price that they are receiving for selling their oil and their gas and their liquids. My pet peeve is that they hardly ever list the units, but oil is normally in dollar per barrel. NGLs or plant products are normally in dollar per gallon, and gas is normally in dollar per MMBTU, which is why there's this BTU factor here. We've covered this before, but gas can have a wide variety of heat, like how much energy is in that gas, and that is the normalization factor for how they're pricing it, is how much heat is in that gas. So that's the BTU, the British thermal units, that's in that gas. And when you're looking at just a price for gas, that is assuming a certain amount of energy in that gas. If the gas has more energy, which normally means like a thicker, denser, richer gas, then you'll get more money for it. And if it has less energy, which is usually the more methane, the higher methane component, or the higher amount of other things in it that aren't as valuable or don't have energy, like helium, for example, nitrogen, then those will lower the price of that heating value of that gas, and then they're lower that factor. So they have to convert it. They have to tell you what the conversion factor is. This is an oil sales line, so there's no BTU conversion factor here. But this is how they're letting you know what heating value they got for that gas. My other pet peeve is that I often see the BTU column blank, and I don't see the point of that. It makes it very difficult for you to go backwards and audit if you have a really rich gas that they aren't extracting the plant products and NGLs from in order to get a separate payment, but they don't tell you how rich it is and the conversion, like, oh, it's a really rich gas, you're getting a lot of money for it, but then they don't say how much you're missing a key component. So it bothers me when there's no BTU factor. But if it is oil sales, then that one, there is no BTU factor on oil sales. It's just gas. The value here is the total amount that well made that month. And then for this particular statement, so we have property value. So that's like if that well was its own company, that's how much that company made. And then owner's share is if that well was a company and you had shares of stock in that company and received, let's say that they were management shares of stock and you got like direct payment for stuff. This is how much you get. This is your share. You are the owner. This is your share of payment. I'm sure if there's one number y'all have figured out from this statement, it's probably this one because that's the one that's actually hitting your bank account. But that's usually you'll see the gross volume. So everything before it's separated out, and then the net volumes, which is your portion of it. Owner interest and distribution interest is usually the same. They can be different, and they often are different, but it should be minutely different. And a lot of times this has to do with if there's other owners or units or other factors that are reducing how much you're getting distributed. If there's like something that they're netting out, for example, that's coming out of your net stream on top of your net share, they'll put it here. And then you have your total net volume, and then you have your final value, and then you add all these plus or minuses up, and then you get your check amount. When you see the multiple for this is probably the most confusing part, is this next part. And the thing that I hate the most is on these statements, accountants probably understand this easily. I'm an engineering background. So it took me probably months of talking to my accounting department, going back and forth, asking one more time for them to explain something, trying to understand what they were talking about when why are there all these pluses and minuses? They will estimate the volumes and values in order to get you a payment. And then when the final amount comes through, they basically say, okay, the actual amount was this number. And we're going to subtract out the prior number we did and add back in the real number. And then that way you get the fine-tuned difference. And when it all is added up, you still get the same amount that you're supposed to. We're able to account for it month to month. We're able to close out our books each month. But when it comes time to show a statement of it, it looks like this is a check for for at least 2 different months of production, right? Oh, I see April, I see March in this statement. This must be 2 months of production. And if anything, there's 3 different listings. Maybe this is 3 months of production. This is actually 1 month of production. $13.57 lines up with roughly how much this well is making in April, plus the adjustments of March's number is what this is showing. So if you're trying to reconcile production volumes 1 month to the next, you have to know how to back out these accounting artifacts. And sometimes there's a lot of accounting artifacts, because sometimes what will happen is you'll get reams of statements where it's showing months and years of plus and minuses happening. And that can happen if maybe they do an audit, or maybe there's a settlement, or maybe there's a correction of a meter factor, or something that causes a large amount of wells to change over a large amount of time. They have to reconcile that somehow. And since they already closed out all of those months, they have to just add, pluses and minuses to that check. And then that they say which date that was associated with, but the check date is still that one check date. And so you might get years of adjustments on some and they won't tell you why. They'll just say, oh, there's an adjustment. So that ends up being the most complicated part of these statements. They're usually legitimate. They are not totally clear as to what's happening, like all of these adjustments, like why were they off? Like they thought it was going to be 12,119 barrels that were sold, but it was actually 12,225. There's no explanation as to why. There's no explanation as to why the price was higher. We can guess why things were higher. But that's where, in order to really know if this is a valid change or if this is just, worst case scenario, like them cooking the books or something. Like, I don't even know how you would do that. But worst case scenario, you would have to have audit rights on your lease in order to ask for all of the supporting documentation that is going into these numbers. You can ask anyway, even if you don't. Even if you don't have a clause, you can ask. But it's much harder to force them to give you the information. And you probably need to be working with someone who is very, very, very familiar with all this back office stuff, like the accounting side. We do know some companies that specialize in that. We always do an audit when we do a appraisal. But the level of audit we do stops at the statement. So if the statement is saying a certain number, we might flag things for you and say, this doesn't look quite right. You might want to look into it, but we wouldn't ourselves dig into it. That's where we would pass that along to another contractor or another company to do that deep dive if it was worth it for both you and the problem that we were looking at. Okay. I'm not going to, some of these have actual like legends. And so I know that this is blurry, but this does go into the types of deductions that you might see that are, again, valid, but confusing. All of these deduct codes are examples of what you might see scattered. Let's see, where's the deduct code? Oh, so in this column over here is the deduct code. If there was a deduction, they would be putting the code for why the deduction somewhere on the statement. And the things that you'll likely see are things like compression, dehydration, processing, transportation, shrink, fuel, midstream, other, gathering, marketing, lease use, property expense, oil restoration fee. And then I've seen this go on and on and on, depending on the state and depending on the types of operations that are happening. These are just the codes to the taxes. So there's a lot of taxes that can be applied and applied separately. The most common one you'll see is severance tax. That one is valid. I'm trying to think if I've seen cases where they aren't allowed to withhold severance tax. I personally have not seen ones. I'm sure they're out there though. But severance tax is kind of like your income tax, but not. It's more like sales tax. That's probably the most similar thing to it. And so everyone everywhere is paying a certain percentage to the state that property is in, and that's the severance tax. Each state is different, how they charge and what they charge, but it's state-based. And it's different between gas wells and oil wells and NGLs. Each state handles the different types of properties different. And if you see a tax credit or tax benefit, it's usually on the severance tax level. And so you might see some credits to you that are applied from severance tax if you have, for example, a high-cost gas well in Texas can get a severance tax exemption. That reduces the amount that you pay in taxes. Some states it ends up being a refund. Some states it ends up being a certain time period. Sometimes it's forever. Sometimes you have to apply to get credit for that. Like it has to be a gas well, and so they have to prove it's a gas well before they get the credit. So there's if there's any credits and things happening, it's usually on the tax side, and that's why there's so many little legends here. That's where we're getting outside my expertise. But they usually are legitimate, but do know what taxes are being taken out so that you're not double dipping or either double dipping or not accounting for something that's already been taxed. So a lot of times, for example, you don't have to pay taxes on something you've already paid taxes on. And so there's places where you can get exemptions and whatnot. Okay, yeah, so here in the product codes, this one does have the units. So products, it says, is in gallons. Everything else is in barrels and MCF. I've also seen these where it said the units and it was wrong. So it might say gallons, it might actually be in barrels. It might say, I've usually seen it where it says the plant products are in barrels, but they're actually in gallons. So just keep an eye out for that if you're really digging deep into this stuff. Okay, Okay, if you're seeing an excessive amount of withholding tax on your statements, that usually means they don't have a W-9 for you on file, so they don't know what type of entity you are or where you're located or what to assume. And so they're just taking out the maximum amount of, that's more like the income tax. Like they're protecting the state because they have no way of knowing how much you actually have to pay. So if you're seeing a really high amount of taxes being taken out on top of severance tax and ad valorem, then you might want to contact your people and see if there is something that they're missing, like a W-9. The W-9, if it's been a hot second since you've seen that, is the thing that is just like a very standard IRS form that is your way of telling other people what type of how you should be classified. I, for example, I started off as an individual. I'm still an individual in some cases. And so sometimes my W-9 says Tracy Lenz, has my social security number, says that I am a person, paying taxes. When I started the company, we were an LLC. And the LLC was another type of entity, but also that meant it was, this person is taxed individually, but it also let them know what Pecan Tree LLC, we'll still just use my identification number, still tax me like I'm an individual. When Pecan Tree became a incorporated company, now we are incorporated in the state of Delaware, and so we are taxed differently. And so when we send our W-9 to other companies, they know to tax us or to handle us like we're a incorporated company paying taxes, not an individual owing taxes. So it helps them know who they need to send 1099s to and other things to. And it's just one of those many levers that if you don't do it just right, you might get a very high number of taxes taken out. The last thing, let's see, it's 12:52. I'm not seeing any questions come through, but if y'all have anything, I'm happy to hit it. I'm going to spend this last bit talking about post-production costs and how you know if you're supposed to be paying them or not. This is a very hot button topic right now, and it is something that was the one thing at the NAPE conference that really made my blood boil at one point when I was seeing some of the strategies that at least one person, I'm not going to name names, but there was a person with the booth that was legitimately showing ways that you could increase the amount of post-production costs you were charging the mineral owners. And I would bet hard money that it was not following all the rules of what you're actually supposed to do. As seeing both sides of it, it's really, really easy to charge too much and not have the mineral owners know that you're charging too much. And anyway, that's as much as I'll go into that particular topic, but that's why we're here. Let's see, do any of these statements have those costs? Yes, here we go. So if you're seeing a whole bunch of other fees, so this, y'all can't see what I'm doing. So this statement here is an example of one that has a lot of other fees happening. We see that the well made $439, But then there were, hundreds, almost over $100 of fees taken out after that. Hey, I'm in the middle of a live stream, so please don't interrupt right now. Okay, afterwards. Okay. Sick kiddo is home and she finished something she wanted to show me, which she'll show me afterwards. Okay. Yes, so you'll see quite a bit of adjustments happening on this one. And this is where, when we talk about how it's really important to work with an attorney that knows the terms for that state, when it's really important to pay attention when you're forming the lease and signing the lease, this is why, because these costs can add up quickly. And I mean, we're talking, this is almost a third of the total amount is being taken out of fees. And so what these fees are is when your lease says that you're going to get paid based on the price at the wellhead, that is one price, but when they're selling it, it's not at the wellhead, it's somewhere else. So there is cost to get it from the wellhead to that other place. And most states have a certain stance on whether or not it's assumed that, okay, yeah, well, when we meant selling the oil and gas, we meant to the actual person who's buying it, not just to the heir at the wellhead. And then there's some states that says, no, you own it at the property and then you have to pay your fair share of getting it to the person who's going to buy it. So that's where knowing what state you're in and what bias they have matters. Two that I'm familiar with is Texas leans towards that most lease language assumes that you have to pay your fair share of getting it to market, while Oklahoma leans towards, hey, if it doesn't specifically say you have to pay your share of getting it to market, it's assumed that you don't have to pay your share of getting it to market. So there's been certain court cases in different, Martha, fees were such a surprise, 30% of gross. Yes, if you're in an area where there's a lot of gas is where the fees are really being applied. You're not going to see as much on the oil side. There are fees and there's definitely costs that are, put on to the owners, but gas is really where it hits hard. The fees add up when they send it to the gas plant and get the gas processed and turned into better paying products. And so I like to use the example of if you're a landowner and you let someone come have a garden on your land and they grow cucumbers and you have a deal with them that says, for every cucumber that you sell, I get 30% of it because it's my land, or I get 25% because it's my land you're using, but you're doing all the work. And then we'll call it even. Like that will be my royalty, my cucumber royalty. But let's say that they then took those cucumbers home, chopped them up, turned them into delicious pickles, and sold them for $15 a jar. They're receiving more money for the same product, but it's a better product. They had to spend money to create that product, but it's still technically your pickles they're using. Do you get a percentage of the $15 jar of pickles, or do you get the percentage of the $1 cucumber? And that's kind of the dividing line is, are you on team pickles or are you on team cucumber? And it depends on which side of the economic factors you're on. So that's why it's so important that you define, hey, if you do anything with these cucumbers that you're growing, make sure that I still get my 30% royalty from who you're ultimately selling it to. Wells in West Virginia, severance tax in West Virginia and Ohio. And I think you're on the border. And so if you're in a unit or in units, for example, that have crossed into the border of different counties, different states, you're going to see they make sure that they get their share of that unit, even if part of it is in a different state or a different county. So again, you might see double all of these when they go through both sides of it. So those production fees, so they're typically called post-production costs, because once you produce it, it's a cost that happens after you produce it. So post-production. Most people don't have to pay, if you're a leased mineral owner, you don't have to pay anything leading up to the oil and gas leaving the wellhead, right? Wherever it goes to be sold, the cost it takes to get it out of the ground, drill the well, those things. I've not seen many, if not any, leases that require someone to pay their share of getting it out of the ground if you're a leased mineral owner, because that's kind of the point of a lease, is that people don't want to have to pay that. It's millions of dollars and you might have a large share. So that's kind of the point of this whole arrangement, is that you don't have to pay fees, you don't have to pay costs to get it out of the ground. But from what happens after the wellhead is the question. So like in this case, both gas and NGLs are processed at the plant. And so both gas and NGLs are seeing the same deductions. So we have like an NGL fee, a transportation, marketing. There's things that are being assigned. You can make it to where your lease says, hey, whatever it is, I'm not being charged that, but that's where it gets really tricky. If you're trying to go against the norm for that state, the default for that state, that's where you really need to make sure that you're working with someone very versed in what language works and what doesn't for getting those fees, out of your hands. I've seen, well, I want 25% of the 8/8 value. 8/8 being, if I have a piece of pie and I'm eating 8/8 of it, I'm eating the whole pie. So if I'm getting 25% of the whole pie, well, that should be cost free. Like there's no fees taken out of it if it's the entire amount of the thing. But then it's like, okay, well, 8/8, when are we defining what 8/8? Like there's very specific cases that you have to be very careful of. Mary, you're saying, so do we need to do both West Virginia and Ohio state tax returns? As NPRI, we have no say in the lease. Yes. So that is the problem with these, the trend in not filing the lease is you don't have rights to see those terms, and you might never see those terms on what deductions you should and shouldn't see in your statement. And that's why it's very important to support the legislative initiative to force the companies to file that and have it on record and provide the leases to the owners that are being charged these fees, because it's already hard enough to understand, and then you don't even know if you should be being charged these fees or not. It's just, it's a whole ordeal. If going back to that, if you're being charged, if you have both severance tax in Ohio and West Virginia, that I would consult with a tax professional, but I do believe that you are getting paid from income from both states, essentially. It's just, you have property in both states. I mean, that's honestly why you're getting paid. And so you have property in both. It'd be like if you had a rental house that had half of the footprint in one state and half of the footprint in the other. Or maybe just even simplify it more. You have two rental houses. One's in one state, one's in the other. They're going to care, right, about the amount of income and taxes you're paying in each state. So that's where thinking of it as real property, thinking of it as income that you're extracting from that property, helps clarify things. I know that these, especially NPRIs on wells in different states, can be very abstract in terms of like non-tangible. And I don't know what this means. I don't know what this is doing. You found the lease online. Yeah, okay. So if you found the lease online, that's where reading through the specific terms, it says right around the time it says you'll be paid X amount for each barrel. Maybe it's 1/8 or 1/4 or a quarter. Usually the sentences following that statement describe where that's being defined. So 1/4 of what and where it's being measured. And that's where it's going to matter if you're having to pay those fees or not. If you'll probably see one for each product. Yuck, Ohio too. Sounds like it. I mean, if you're seeing both, I would have to pull up y'all's property again to see, but I think it was close to the state line last I looked, and so it's likely that there's a portion of it that goes over into the other state, or maybe there's just an agreement. But it's worth looking into. Like if you don't have any property in that state, you shouldn't have to pay that state's taxes. But some of these units can be quite big. Okay. Final notes is if your operator changes hands, like if one operator sells to another, that is a prime time to check that you didn't have any extra fees that snuck into your statement, because that's usually when I see things sneak in there, is when a change of hands happens and the new operator had it. Sometimes it's completely it's close. Sometimes it's completely innocent. It was just an oversight. They had a default way that they handled things that was different than the default of the other operator. Usually they at least had some business reason that they are making that assumption, so it's in their benefit most of the time, and then they only kind of come back on it if people complain. Whether or not you think that's a good idea or not, that's your prerogative. I'm just saying it happens. And so if you're getting paid by someone different, just double check that you're getting the same fees taken out as you did before. And if it's different, ask what changed. Thank you for all. Yeah, thank you so much for coming today. So we normally wrap up around 1 o'clock, so I'll probably call it a day, especially with my voice being kind of groggy. But thank you guys so much for joining us today. It was a pleasure as always. Let's see, to the next month, I believe, or not next month, next week is next month. Same time, same place. I did not have Crystal here. I do have my Crystal Cam, but she was monitoring the food situation that's happening in the other room, so didn't get any crystal footage today. Go ahead and get our music going. Thanks again for joining us. My name is Tracy Lenz. I'm a petroleum engineer. I am the owner of Pecan Tree. We are an engineering appraisal firm, and we also have used our engineering experience to create an online platform that anyone can come and see the value of their minerals. So happy to talk to you if you need help with anything that you come across, and you're welcome to peruse our videos. We have lots of stuff online. We really are focused on getting education out there. So thanks so much for joining. We'll see you next week. Bye.